All right, guys. Good morning. It's uh, it's a new day. We got 6,000 above. It's also nice to wake up and see Bitcoin testing up around 98,000. We're getting pretty close to 100K. So we're kind of in this a bit of a no man's land right now. All right, we gapped up. We gapped up above this range that we've had over the last few days. I'm drawing this gap here. The market has just been refusing to fill this gap. We gap down here. We spent a few days in this lower trading range, and now we gapped up. So there's still this empty space here that's yet to be filled. Hey, John, welcome to the stream. So we'll see if it can close this gap on the open. There's a pretty good chance it will. This week's been interesting so far. How it's stayed basically in this lower trading range down here, kind of bouncing around 5,900. You know, like here's Tuesday, trended up the whole day, and then Wednesday ultimately became a trading range day. Although, right, I mean, this is a pretty strong move down, and then this is a pretty strong move up. All right, so this gap just closed. Well, that's a more than a 20-point bar there on the first bar. So this sell off here, is this just a sell off to test the close of yesterday? Let us pull up the daily chart, see how this looks. So this week on the daily chart has basically formed a double bottom and a second entry long. So we have a first entry long here because we have a pullback and a bull trend, and there's buyers above this bar. We basically pulled back here and created a second entry long here. Second entry longs are better. You know, you could look at this as a double bottom or even a treble bottom, perhaps. So gapped up, meaning we've triggered these buys above this bull bar. So it makes you wonder: is today just a test? Is this just a test to come back to the close here, or the highs of the recent days? Could be. It still could be. This is pretty aggressive selling. We're down 40 points in 7 minutes. Let me pull up the tick chart to see the overnight trading. I mean, overnight we rallied, obviously, which is what created that gap up. And now suddenly we're getting this very sharp move down. You know, there's something I always talk about on the open, is that 50% of strong moves reverse on the open. So it doesn't matter how strong they are. Yes, this is we're on the E-mini. Yeah, on the December E-mini December contract. So 50% of all strong moves on the open reverse, and you know this is strong enough that there's probably more down from this, but it doesn't change the fact that it's still has a 50% chance of reversing back up. So look at this. Move down on the open here, and basically it spent the whole rest of the day going up after that. You know, this is a case where it did not reverse, so we basically bottomed early and rallied up. You know, maybe you could call this a strong move up on the open. You know, you probably could, because this is basically, so the market opened right here, and then right from the open it basically went up until, you know, this is basically like the first part of the day, and ever since then it basically made lower prices. So I mean, I would say this is exceptionally strong selling on the open. You know, we have a 20 point bar followed by a 30 point bar. I'm gonna pull up. I'm gonna be monitoring Bitcoin today as well, because Bitcoin's so close to getting to that 80,000. So we'll kind of keep a close eye on that. News. You know, no news. It just came out at like 9:30. So 2 consecutive strong bars. This is a good bar to sell the close of, but you have to trade very small because your stop should be, in theory, way up here. So I think a lot of people, like a lot of institutions, will be selling that close, but their stop is up here, and they're even, you know, I mean, anyone that's selling this close, they need to be trading small enough to be able to handle their risk being up here, right? So your risk on any trade should not be greater than, in like, you know, you should basically have like a max risk, and you shouldn't go above that. So like whatever your full size risk would be, you want to make sure that your total risk by selling here with your stop here would not be greater than that. And with this being more than 50 points down, you know, I imagine you'd have to scale way back for your position size, for your total risk not be greater than your standard risk. So when there's this much movement, I like to look at the 2000 tick chart, right? Because on the 5-minute, our information is basically 2 large bear bars down. But on the 2000 tick, we get to see all this. We get to see all the little moves inside, all the little traps, all the little pullbacks that get follow through. So on the tick chart, this is the area I like to monitor. You know, we have a strong trend down. How does it react around the moving average? are the bears. The bears will obviously be trying to sell it lower. How successful are they at doing that? You know, like as it's making these attempts down, the bears are trying to get it to go lower. And if you see that they're unable to do that, and on attempts down, they're failing, and then it kind of goes a bit higher, then they fail again. Those are signs that the bulls would be taking over. But if there's not that, then that's a good sign that the trend would be continuing. Let's think about other signs that the trend would be continuing. One sign is gaps. I wouldn't really call this a gap here, but this has become a support and resistance level. Right? We came down here, we bounced at that level, and broke through. Now when we came back and tested it, we stayed below it. So the market respected this. And if you pull back, it'll probably respect it again. So this is probably going to remain important for at least a little bit. When I see two strong bars down like this, I normally put in a measured move target. And the way I do my measured move target is basically from the open to the close of the strong move. So two strong bars, that's a spike down, and I put my measured move. That puts us way down here, which actually looks like it'd be a reasonable target because it's at yesterday's low. I'm not able to predict what the next bar or next few bars will do. Is this going to end up rallying and closing up here for the day, or is it going to go sideways, or are we going to end up down here? I'm not sure. However, a lot of the times what the market will do when we get a measured move like this, a lot of the times it won't just immediately go down and hit it. It'll kind of bounce around throughout the day, and then as you get later in the day, eventually it'll give up and it'll collapse down to the target. So that's just kind of something to monitor. We'll probably, for as long as the market stays below this high up here, then this will remain a target. People are selling this close, they have their stops up here. So as long as those stops are able to be still in, then that means in theory people can still hold short, and then that this would be a target for them. So third bar is a bull reversal bar. It's closing near its high. So not the follow through that the bears wanted. However, their stop should be up here. So this probably isn't enough for them to get out yet. I think they'll still hold short, and they would want a more credible bottom, like a double bottom or a wedge bottom. And then they would be more eager to get out of their shorts. How many people are really buying above this bar? The market has just fallen 50 points in 10 minutes. And this one bull bar is not going to offset all of this selling. That's also the third bar of the day. So that means we're 15 minutes in, and this is the 15-minute chart. So on the 15-minute chart, we can see gapped up above the range that we're in, most breakouts fail. Most breakouts of ranges fail. This is an attempt of a breakout. So now we're pulling back into the range, and we're likely to get at least a little bit more down. This is the biggest bar that we see on the chart. And whenever you have a biggest bar, that's significant, and it's really defining what the what the market is doing. We have five bars up, well 6 bars up, but a lot of consistent strong buying through here, and pull back, second leg up. We got 3 strong bear bars. Now later in the day, the market did rally up, but the best that the bulls were able to do was basically a trading range for the next 3 hours or so. So I would expect that the best the bulls can do in this case would be a trading range. I would not expect them to be able to immediately reverse this into a trend up. Think about people that sold this close. Their stomp's going to be up here, and they're probably going to be selling into any pullback. So I think these bull bars, the hope in these bull bars will be short-lived. Yeah, though, I mean, unless you're able to trade small enough that your risk wouldn't be larger than your normal risk, then you shouldn't be trading at all. Perhaps you could look at the 2000 tick chart, and how I would do that. I don't think I will, because we are so volatile, but and we're market just open. We're still in the open. We're still figuring out what kind of day it's going to be. But if I was trading, I'd be looking at the 2000 tick chart, and I'd be drawing my lines like this. Just a few minutes ago, we had it drawn in like this, and I said it was probably going to be important for at least the next few hours or so. Look, we broke above it, pulled back, and now we're rallying after touching that level. So on the 2000 tick chart, this is how I like to look at this chart. You get lots of these little support and resistance levels that occur throughout the day. So now, if the market pulls back down here, this is probably going to act as support and resistance again. So either you could look for a bounce at this level, or probably would be better would be for it to break through and then retest it. So the market, you'd probably look for the market to break through and then retest it, and then at that point you'd want to look for a short down. Kind of like how this did here. We broke through it and pulled back, and after that it rallied. So bears have not gotten the follow through they've wanted here. However, these 2 bull bars are much smaller than these 2 bear bars. Let's look at a 50% pullback here. So they've gone past the 50% pullback. So I mean, this is good for the bulls. They're stalling this sell-off. To me, now that this pullback has grown to this size, I still think the bears that sold here will be able to make money at some point today, even if it rallies up to 6,000. What I would be looking for, what I would expect to happen, let's just use let's just use this as an example. Something like this is kind of hard to compare, but let's say the bulls bought here. It's not completely unreasonable for the bulls to buy this bull bar. Possible double bottom, strong bull bar. Some people might buy that. It's probably best for at some point for them to get out of their longs, like below this bar. But if they stayed long, which some institutions will do, they'll stay long and they'll buy above a bull bar after a credible bottom. Perhaps they'd buy above this bull bar. So let's just use that as an example. So they bought here, they bought more lower here, and then they'd be getting out of this middle price here. So looking at today, let's say this does continue to rally up. I would expect sellers at this close to be able to sell above some bear bar some bear bar up here, and then it would come back to this middle price here. You'll see a lot on the 2000 tick chart that the 200 moving average also acts as support and resistance. Sometimes it just blows right through it. It doesn't matter at all, but then you can see this pullback. It got stopped there. Pullback, it's getting stopped here. So there's a lot of play that you can make off of the 200 moving average and also from your support and resistance lines that you draw in. So I think what's happening now, the bulls are stepping aside for a bit, and we're going to see if the bears can get much of a second leg. So after this much selling, we're pretty sure the bears are going to be able to at least avoid a loss if they can trade small enough and scale in higher. And usually they'll get at least a little bit of a second leg. So this looks like that time where the bears are attempting to create their second leg. Sniper, good morning. Looks like this will be an exciting morning. Lots of big moves. We have a 50. The first 10 minutes we had a 50-point sell-off. So when the bars are this big, I prefer to look at a lower time frame, like the 2000 tick, because you can get these trends, right? So on the 5-minute chart, this is on the 5-minute chart. All this is 2 bars, but on the 2000 tick, you have these very clear trends that are occurring. Trend here, double bottom, trend here. Bitcoin got to 98 earlier this morning. So we'll definitely keep an eye on that and see what it can get up to. I'm playing around with my stream settings. I'm gonna add something to the chart. So there we go. So there's a live Bitcoin tracker. So 2 strong bars down. We're expecting a second leg. It's possible this is that second leg. So people sold this close. They basically sold into this pullback. So this will be important for people that sell in this close. Are they able to make money? Are they able to at least get out break even? If not, that could be a concern. So I really like to monitor how it attempts to move lower and how it tests this close here. I'm going to get rid of that measure move for a second. People that sold that close, some of them will scale in 10 points higher, for example. That would put their midpoint there if they had done that. So, if someone had basically just sold here, sold 10 points higher, and held, they would have been able to get out break even there. That's not really too important of a price there. I think a lot of people would have continued to sell higher through this, or sold at a 50% pullback. So I think there'd be more sellers up here. So let me draw that in. So people sold the close here, sold at a 50% pullback. And then look at when the market pulled back here, it bounced at that 50% pullback. That's what this tail was on the bottom here, and then this wick on the top of this bar here. However, are bears able to make money from selling this? Are they able to actually get out at this close here? So far, it looks like they will. But that's the kind of stuff you want to monitor. That's how you can look for trends to end, and there to be potential reversals. Because this was a lot of selling, but if they're not able to get out with profits on their shorts, and the market starts to move up, then they're going to be stuck in their trade, and they would have to buy back their shorts, which would create a lot of buying in the market and could send the market up. So the market, it's not random what it's doing. These are real orders with real people. Well, with real people and real computers trading it, but at least it's real money. And if there's real money trapped into a bad trade, then they're gonna have to scramble to get out of it. So we see a little bit of a bounce here, a little bit of a pause. It's reasonable to assume some of that is people that had sold here, buying back their shorts here and getting out break even, or with a profit on a higher sell up here. So let's talk about some targets. What do we have below? We have 5,900, which has been important for several weeks now and continues to be important. We have this measure move down. So we have these two strong bars. I like to draw a measure move for that. And oftentimes, if it doesn't go down immediately, oftentimes later in the day, it'll eventually work its way down and hit that target. You know, I mean, pretty much all the computers and pretty much anyone that's trading the E-mini has drawn this target in, and they know that this is the target for that measure move down. It's also at the low of yesterday. So we have a confluence of targets there that makes this area an important area. Targets above, now we're far enough down from the open of the day that there's a target there. We also have 6,000 above. Notice here on the tick chart, we have this trend down, and it's something to look for, especially on the tick chart. You can draw on your trend line something like this. You have your trend line coming down. When that trend line breaks, most of the time the market does not immediately rally up. Most of the time it usually tests back and tries to go below the low, or at least test it. That's what we did here. We broke above the trend line and we tested back down to it before rallying up. Same thing here. We have this channel down. Pretty clear trend line you can draw in there. Before the market can head up, it needs to test back. Usually it tries to go below the low here, but at least a test back is a minimum. So after a trend line break, I don't immediately start buying. I would wait for it to retest the lows. Yeah, John, you threw a lot of information there. Let's say you had two targets at 8 a.m., 59.60, then 59.71. So at 8 a.m. you were thinking 59.60, so let's see. Yeah, so you have, so these are your targets you're talking about below. I'm not sure what's caused all this selling. I don't know if you guys have seen any news. There weren't any scheduled news events. I would expect, strong moves don't require a news event. I would expect something like this, though, to have some basis in news. What's something else that's good for the bears? We have these gaps here. This low and this high didn't overlap. This low and this high so far have not overlapped. So when you see those gaps, it means bulls are not able to buy below bars and make money. So sellers of the second bar have made money. Sellers of the 50% pullback have made money. Sellers of these bull bars have made money. So only looking for shorts at this time, especially with these gaps being open. This has signs of being a possibly really hard market to trade. It has signs of being what I call a large bar trading range, where we're getting large bars, but then we're also within a larger trading range. And, so the math doesn't make much sense. If you have large bars, you have large risk, but it's a trading range, so your profit is small. That being said, though, on the 2000 tick, look, we're getting these great like kind of trends. So it's reasonable to be looking for swing trades on the tick chart. The 15-minute chart. Strong bear bar on the first bar, and it got a bear bar as a follow-through bar. So that's good for the bears. At a minimum, they were able to get a follow-through bear bar. If that was a bull bar, that would have stalled their progress some. So we still have 5 minutes left on this 15-minute. Yeah, John. I agree. Basically, once you have something that that works, then it really is just, the patience and discipline to just trade that. It's funny over here, for someone that was not in the stream at the beginning, I had this line drawn in here like this from this test low to this test down here, and then it was support here, then it acted as resistance here, and I drew it further out, talking about how it might be an important level for the next few hours, and that's exactly what it was. It bounced here, then kind of acted as resistance a couple times there, and it's not a perfect test here, but this is probably still reacting off of this level. This pullback here is probably still reacting off of that. On these busier days, probably about half of the days you could just trade just the tick chart, and I've considered doing that myself, and I've kind of done that in the past. Is if the days has more volatility, then you can just go look at the tick chart, basically wait for a good like swing setup in the direction of a trend, and take a handful of those on a busy day. And I think that'd be a fun and reasonable way to trade. So getting a little spike up here. Let me go to the 5 minute. See how that looks. Market is trying to double bottom here. This move that's starting to be fairly strong. Think about it from the bear case. They sold this close. They sold more higher. Probably some of them got out, break even once it came back to their initial entry. And then once they got this double bottom with this bull bar, this is now a second entry long. So first entry buy here, pull back second entry long. So the second entry long at the 200 moving average, possible double bottom. Probably a lot of bulls, probably a lot of people that were short would go ahead and get out above that bar. And if the market's going to go lower, they'll have chances to sell again. But I think this bar being aggressive as it is because it's not so much bulls buying, but it's more of bears are getting out of their shorts here. Bears that sold here, they're thinking they didn't like how deep this pullback was, how they could sell here and get two bad follow through bars. And then now the market's trying to go up against them a second time. So probably a lot got out here, and that's what's creating this strong bull bar up. And this move is strong enough up now that this will probably get a little bit more up as well. So now we probably have buyers at this close, and it's going to kind of recreate the pattern. Like just like there were sellers here that scaled into this pullback, there's probably buyers here that are going to scale into this pullback. $15-minute chart is the complete opposite of what the bears wanted. 15-minute chart, clear double bottom, and a strong bull bar. So pretty much all through this, I was talking about I'd only be looking for short trades. Now I think it's more two-sided. I don't think it's as clear that you should only be looking for short trades. Now this is more trading range price action. Yeah, the bulls are strong here. This is not enough to convince me that they are completely in control. So we've moved from a more directional market to a more sideways one here, which makes me more hesitant. Because now this is kind of fulfilling the idea of a large bar trading range. If I'm buying here, my risk is going to be big. I'm going to be risking 20 or 30 points depending where I want my stop. So how do I set up my profit target? Do I do a swing trade? Do I buy above this? Try to go over 2 times that risk? Maybe. I think it's tough to try to be scalping with a stop order here, because you have this resistance here, and then you're still going to have people that are going to be selling into any strong moves up here. So it's tough to buy. It's tough to buy for with a stop order and go for a scalp. I mean, I think the only way to, if you're going to be buying above that, you'd have to do a swing trade. And it might be, I'm not sure how good your probabilities would be on getting up here first. So that'd be, so I think it's better to just stay off to the side. However, I think it's probably still reasonable to look at the tick chart and try to find, swing trades, because we're still getting these nice big moves. I had posted a video. I'm not sure if you guys had seen it yet. This is basically about market playback on NinjaTrader. It lets you go back and trade the historical data, so you can trade the real, like the candlesticks tick by tick. So if you want to practice your trading, or if you missed the day, well, that's a great way to do that. And this video shows you how to set it up. So if you're interested in that. I know a lot of other platforms have that as well. So, check to see if your platform has a feature like that, and definitely use it if it does. Double bottom, strong bull bar, but bad follow through. And that's probably what we can expect until it breaks out of this area. That's why it's tough to take stop order trades. Let me glance over at some other markets. NASDAQ is kind of in the same boat. It's a little more bearish, I think, but it's a little more bearish because it's getting these lower lows and lower highs. But it's still in the same boat with these deep pullbacks. Bitcoin, possible double bottom at the 200 moving average. We'll have to see how that plays out. Crude oil sideways. Gold pretty much sideways as well, kind of right at the open. Possible wedge pattern though. First push, pull back, second push, pull back, third. So in theory, if this becomes a bear bar, then anybody that was long through here should be getting out below that bear bar. I'm not sure if it'd be good enough to short. I think if I was going to take a short below a bear bar like this, basically I'm betting on this being a double top, and that this is going to be the high of the day, and then we're going to basically trend down the rest of the day. So this would be 2 times your risk. I'd rather be more like 3 or 4 times, because if I'm going to take this, I'm only taking it if I'm betting that it's the high of the day. So really, I'd be wanting to try to come down and test this close. And I wouldn't be shorting here just for a test back to the moving average. I would be, if I was long, I would get out below it, and if I was going to enter a trade, I would get short below it to go for more like 4 times my risk. it's setting up, we have the high of the day up here. We have this double top through here. Now we're getting a strong bear bar. A double top here. So in theory, that'd be a sell below this bear bar. You know, the idea here is that you have bulls that were buying above this bar and this bar, and now they're going to be trapped if the bears can push the market down from here. Also, something to notice: we've gotten lower lows and lower highs. So this low is lower than this low, and this high is lower than this high. So we have several reasons for the market to be more bearish now than bullish. You know, you can't ignore the trading range nature of this, but it's leaning a little bit bearish now for the reason that I just said. Now, I wouldn't take this swing trade here as a short. I don't want to be risking 20 points. But I think in theory, it would be a swing short below that. Bearish open, double bottom that's possibly failing. Strong signal bar to sell below. So it's a short, but it's a swing short, and you're selling really for it to get all the way down here. So at these critical moments, this is when I would jump over to the tick chart and possibly look for a swing short on that. I'd want to see a convincing bull trap. So I'd want to see the bulls try to go up a couple times and then fail at the moving average and with a good bear signal bar, and then go for a swing off of that. If you want to be aggressive, you could basically sell below any bear bar in a pullback, sell below that, go for a swing trade, pull back, sell below that. Another way to be aggressive would be to just sell a bull close. So strong move down, we have a bull close here, you just sell that. Strong move down, bull close, you probably lose on this pullback, but there are other pullbacks throughout the day that if you had traded like that, then you would have had lots of room to profit. So like if you had sold this close or sold this close, sold closes through here. So if you have a strong premise that the market is going in one direction, then those are ways that you can be aggressive. So this is going to be really good for the bears if they can get a close near its low here. It looks like they will, although it's possible bulls will buy it up in the last 20 seconds. You know, bulls here look like they're kind of giving up, at least for a couple bars. We're getting lower near the 5,900. So good close for the bears. Probably would be some sellers at that close. Probably sellers at this close selling higher. So any pullback that we get here will probably be, it'll probably have like tails on top. And like if this does pull back here, probably the bull bars won't have great follow through. So let's say we get a bull bar here. You know, we might get a second bull bar, but then we'll probably get, some bad follow through like we did here or here. So two strong bear bars in the open. We expect there to be at least a second leg off of that, and then pull back second leg. Now this move here has been strong enough that we can expect a second leg off of this. So we would expect a pullback not to grow too large, and then more down, probably to test 5,900. We're talking a lot here about this is going to look like a trading range. And in a trading range, what people will do is buy below bars, especially lower in the trading range. So we know there are buyers below this bar here. So it would be important to monitor, can the bulls pull this back at least to there so they can buy here, buy more lower, and then get out with a profit on their second entry and break even on their first. If they're unable to, and this gap would be open, and that would be good for the bears. So bulls were able to overlap that. So bears are not as strong as they could be. What the bulls are hoping for is that this would be a wedge. they're hoping for 1, 2, 3, and then they're hoping to be able to buy above a bull bar here for a swing up. That's what they're hoping for. I don't think they'll have much luck. I think it's more likely we have a strong leg down, we'll have a pullback, and then we'll get a second leg. We have 3 strong bear bars, and then we have this weak bull bar with this tail on top at the 200 moving average. There's probably more sellers above this bar. They'll sell for a scalp, maybe like 5 points, and then they'll scale on higher as needed. So scalpers are trying to make their money now. I know they were able to make at least about 3 points during that, but when the bars are this large, I'd rather be going for more like 5 points or even 10 points. You can see a bit of a wedge forming on the tick chart as well. So bears that had sold above this bar, they were able to make their 5 points. And if they hadn't already, they would have been comfortable scaling in higher up here. as a bad buy signal is a good sell signal. So good sell signal, trading range at at worst is a trading range, but it's probably going lower. So a lot of people would feel comfortable selling there and scaling in higher if they can trade small enough to do it. I think the case would be the same with this bear bar. If the market gets up here, well, we're in a bear trend, and this is a bad buy signal. This is kind of basically the worst bar you'd want to be buying above is a bear bar with a big tail on the top. So that would a bad buy signal be a good sell signal. I wanted to congratulate Forrest here. Forrest had posted about his he's using a prop firm, and he reached the payout threshold on it, and that payout's under review. So congratulations, Forrest, on that. And he's been posting some of his trades in here and explaining kind of what he was doing. So Forrest, good job on that, and thank you for showing us some of the trades you were doing. Like I was saying, probably sellers above this bar. Even if it goes up a lot higher, you'll be able to watch it later in the day, and they'll usually will be able to come back and at least get out by break even. I'd really love to see Bitcoin hit 96. Hit 100. I don't know if it'll do it today. Might still need a little bit more time. Once it goes to 100, um, it's possible that they break out. We'll just continue up. I don't really. I mean, we could look at the chart and think of some targets. First thing that comes to mind measure move up with that and put it around 105K as a target. Make it a bit larger and be closer around 110K. Another way to look at it is this has been a very strong breakout here. Strong breakout, and then you get this first pullback. So that drop measure move somewhere in this area, put us around 112. So those are ideas. I mean, I think if it can get above 100K, then there's a good chance we would see that extra like 5K, 10K, 20K. So we've had this wedge drawn in here. Looks like we're getting the attempt up from that. So 3 pushes down. After a wedge pattern, you can expect 10 bars and 2 legs. So this might be 1 leg, pull back a second leg. That would fulfill the 10 bars, 2 legs. I'm going to go ahead and end the stream at 11 today. And that's all I expect to do for streaming today. Unless Bitcoin gets close to 100K, then I'll throw a stream back on. Oil gap up, possible double bottom at the moving average here. So I would look at that as being a swing buy. I think that'd be reasonable swing buy there. You know, the market was bullish because it gapped way up, and now this is all basically just a pullback, and then you get a double bottom at the moving average. So I think that's a good place to look to go for a swing buy. Gold still above the moving average. Still hasn't touched it yet, but has been very sideways. This wedge we were talking about and the sell below here obviously got stopped out. And I was talking about if you're going to take this sell, I think you really need to be going for a target down here because I didn't think your odds were too great up here. I think it's reasonable to sell, but you're needing to bet that this is the high of the day, and it's the odds weren't that high. So you really need to bet that this is the high of the day, and we won't go above that, and then we're actually going to trend down for the rest of the day. So if you're going to take that short, I was thinking more like 4 times your risk is what you needed to offset your lower probability. So the 5 minute, we keep getting these real nice looking bars that are closing near their highs or closing near their lows. We're getting trending bars, but ultimately we're sideways. We're in a trading range. Until we break out of this trading range, we're going to continue to do stuff like this. And look at the tick chart. I mean, we're getting these trends, which are basically like one bar on the 5 minute chart. When you squeeze it up, you can see really we really are just in this trading range, and we're in the middle of this. And until we really leave this area, we're going to continue to just keep doing this. So assuming the bar closes like this is going to be good for the bulls. Like I said, it's tough because we're still in this trading range. Probably strong moves are going to continue to fail until we truly get a breakout. But what is good for the bulls, they've had 3 bull bars closing above their midpoints, and we're getting these gaps. So you look at look at this high here, did not overlap with this pullback. Then this high here, we broke out, and the pullback did not come back and test that. Now we're getting a strong close here. These gaps mean that sellers are struggling to make money. I'd be comfortable being long on oil. I could clearly say that oil is only a buy. I wouldn't be interested in selling oil. The mini, I'm liking these strong bull bars, but it's tough to say. We've just had too much trading range price action. Strong moves in trading ranges are more likely to reverse. I think you can, right? Like I've been saying, like you can try to catch these moves on a lower time frame and try to swing on a lower time frame. But buying closes up here, the context is just bad for it. I think the bars look good, but the context is bad, and the context always is more important than the bars. Like I said, I like how the bars are looking on the 5-minute chart. But like this was looking good here for a short. And then this is what happened. Or these two bars were looking good for a short, and then, basically went sideways for the next hour. Bars looking good here and here for buys, but I got bad follow through. So we can expect to get bad follow through until we don't. At some point it'll break out below or above. Then we can say, okay, now it's doing something different. But until it does, then it's better to bet on these strong moves to fail. All right, guys, that's all I've got for this morning. I'm not planning on live streaming again, but if Bitcoin starts to get around like 98, 99K, then I'll definitely be hopping back on and watching that. So guys, have a good rest of your day. If you guys take any trades, feel free to post them in this post your trades chat. I'm always curious to see what you guys are doing. It's a good place to just to show what trades you've done, or if you're looking for feedback, we can. That's a good place to ask questions or do whatever you like with that. All right, guys. Have a good rest of your day. See you.